Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets buried in company filings. And let me tell you, today's filing is like a financial puzzle with some interesting twists and turns. Get ready to dive into Celularity Incorporated's latest report. We're going to unpack exactly what is going on with their money matters and what it means for the future of this company. And hey, before we get into the nitty-gritty, if you love getting clear, no fluff insights into corporate finances, make sure you are subscribed. Also, we've got a fantastic Discord community where we chat about these filings in real time. The link is in the description below, so join us there. Alright, let's get straight to the heart of this report from Celularity Inc. It looks like they've been busy making some big deals to get more cash. They've entered into a couple of major financial agreements. Think of it as them borrowing money and also getting some extra wiggle room through warrants, which are like options to buy stock later. First up, they've got something called a senior secured note financing. Basically, they've borrowed $7 million and have the option to borrow up to $8.4 million more. This money is secured, meaning there is collateral, and it has to be paid back. This note accrues interest at 4% per year, but watch out if things go wrong, that interest rate can jump way up to 12%. The big news here is that this note is due quite soon, by April 2026, or even earlier if they manage to pull off another significant financial deal, like selling assets or getting more investment. Along with this loan, they've also issued a warrant. This warrant gives the investor the right to buy a whole bunch of the company's class of common stock, specifically up to 24,48917 shares, at a price of $2 per S-share. This warrant can be used starting in June 2026, and it lasts for a good chunk of time until December 2030. It is important to note that if Celularity makes deals that are more favorable to other investors, these senior note investors get the same better terms. They also have a right to participate in future funding rounds, which is pretty standard for this kind of deal. Then there is the convertible note financing. This one is for $3 million and they have the option to get an additional $2 million. Unlike the senior notes, these are convertible. That means the investor can choose to turn this debt into shares of Celularity stock. The interest rate here is 8% per year, also increasing to 12% if something goes wrong. But this interest is paid in kind, meaning more debt or stock, not cash. These notes are due by the end of 2026. Just like the senior notes, these convertible notes come with a warrant. This one allows the investor to buy up to 1258740 shares of class, a common stock at a price of $2 per S-share. This warrant is also exercisable from June 2026 and expires in December 2030. Similar to the senior notes, these investors also get the benefit of any more favorable terms offered to other investors and have participation rights in future financings. On top of all these financing agreements, there is also a board observer rights agreement. This means the investor gets to send someone to observe meetings of Celularity's board of directors, but this person won't have voting power. This observer position will last until the investor owns less than 5% of the company's stock, or until some major change happens with the company like a takeover. These agreements are definitely a sign that the company is actively seeking capital and working with investors to stay afloat and grow. So, what is the real takeaway from these deals? Celularity is essentially taking on significant debt and issuing equity, like instruments to fund its operations. This is a common strategy for companies that need cash to develop their products or expand their reach, especially in fields like biotech where research and development can be very costly and take a long time. The crucial part is how they manage this debt, and if their future growth plans can generate enough revenue to pay it all back. Now let's talk about how these shares are being offered. It is important to note that these securities, including the warrants and the convertible notes, were not registered with the Securities and Exchange Commission, or the SEC. This means they were sold under an exemption, likely because they were sold to sophisticated investors who understand the risks involved. This is pretty typical for these kinds of private financing rounds. The company is essentially saying these shares can't be easily bought or sold until they are registered or another exemption applies. So don't expect them to pop up on your regular stock trading app anytime soon. And to top it all off, on the 22nd of December, the company put out a press release announcing the successful closing of these financing deals. This is their way of telling the world, hey, we got the money we need. Looking at these documents in detail, the senior note warrant gives the investor the option to buy shares at $2 each. If you look at the company's common stock, it has a par value of just a tiny fraction of a cent, $0.001 to be exact. This contrast shows how much value is expected to be created through the company's operations, rather than just the nominal value of the stock itself. The convertible note purchase agreement outlines the terms for that $3 million note. The fact that it is convertible means that if the company does really well and its stock price goes up significantly, the investor can convert their debt into stock very profitably. This offers upside potential for the investor. The senior note itself is a significant financial commitment. It ranks equally with other senior and convertible notes, meaning if the company faces severe financial trouble, all these note holders will be in the same boat regarding repayment. The convertible note matures at the end of 2026, which gives the company about 2 years to turn things around or achieve specific milestones. The conversion price is $1.66 per S-share, which is also quite low compared to other potential price points we see in these filings, indicating a belief from the investors that the company has significant growth potential. Finally, the board observer agreement is interesting because it gives the investor a voice, albeit a non-voting one, in the company's strategic direction. This suggests the investors are not just looking for a financial return, but also want to ensure the company is being managed in a way that maximizes their investment. So, what is my take on all of this? Celularity is in a phase where it is heavily reliant on external funding to push its business forward. They've secured substantial capital, which is a positive sign that investors believe in their long-term prospects. However, the terms of these agreements, especially the covenants on the senior notes and the potential for dilution from the convertible notes and warrants present risks, the company needs to execute its business plan flawlessly to generate sufficient revenue and growth to eventually pay back its debts and provide a good return to its shareholders. The key risk here is dilution. If the company's stock price doesn't significantly increase, or if they need to issue even more stock in the future, existing shareholders could see their ownership percentage decrease. But on the flip side, that conversion price of $1.66 per S-share on the convertible note means that if the company truly takes off, those notes could become incredibly valuable assets for the investors and potentially signal a future stock price of several dollars per S-share. It is a high-stakes gamble typical for companies in emerging industries. Alright, that is our deep dive into Celularity Incorporated's latest financial maneuvers. What is your take on these deals and what they signal for the company's future? Drop your thoughts in the comments below if this analysis was valuable. Hitting that like button really helps us out, and subscribe for more corporate deep dives. Don't forget to check out the Discord community in the description to keep the conversation going. Thanks for watching, and we'll see you next time.